Hey everybody, August 9th, the Market Update Desk with Scott Riley, NMLS number 157524. You can call us directly at 616-293-2189. We did see, the stock market yesterday start to claw back some of these losses that have been going on earlier in the week, but the semiconductor and Mag 7 definitely still struggled in the afternoon. Yesterday afternoon, we also saw a 30-year bond auction that we were hoping was going to be on the more positive side than what the 10-year bond auction was the day before, but it was still met with tepid results. Um, Now, it's a surprise with these yields where they are, but it still has something to do with the supply that is out there with what the government needs to sell off to fund the government on the month-to-month, quarter-to-quarter, year-to-year basis. Now, we did see quite a few Fed members talk in the last day or two. Richmond Fed president, who is a voting member, um, and that is Tom Barkin, indicated that yesterday's sell-off was not something that they see as something that's going to continue and be a concern, but they are watching it closely. Then we also had Fed member Goolsbee speak, and he's a non-voting member, and he addressed the pressure that's been placed on the Fed with what the jobs report was last week and the continuing market expectation. He did reiterate his view that the central bank's policy is too tight, so he's definitely on that dovish side, and he did talk about the concern that they've got in the labor market with that part of their dual mandate with maximum employment. We also had Kansas City Fed President Jeff Schmidt, who's a non-voting member, kind of reiterate the same thing, that he's encouraged on the pace of inflation and that he sees us on our way or on the track to a 2%, but did also talk about the employment component and what that is a continued concern. Now, we do have quite a bit coming up next week. This was a more benign week for data compared to the week before, that's for sure. But this upcoming week, we have Tuesday, small business optimism. We have producer price index. Then Wednesday, we have mortgage applications, which definitely should show a tick up because of where rates are. And we have the CPI come out. Thursday, retail sales, initial jobless claims, National Association of Home Builders Market Index, and Friday, the housing starts, permits, and completions, along with UMich consumer sentiment. Now, that's a whole bunch going on, and it's another one of those critical weeks. Now, what we're seeing for potential CPI, we're seeing various estimates out there, anywhere from, flat maybe, even to up to tenths. So there's a little bit of a variation there. The Cleveland Fed believes there's going to be no progress on inflation, that we're going to come in at expected and not see a year over year decline. Um, Now, what we're thinking is, well, the market estimates are for no change to a 1/10 decline. We're, because of the lag time we're now starting to get the benefit of from shelter costs and maybe a moderation of automobile insurance, we may we may get just a little bit of a better bump than to the downside than what the market's expecting. If that's the case, for example, the 10-year bond is now sitting at about 3.94 as I'm reading it. Mortgage-backed securities are about 15 basis points. If we can get a positively received CPI report, that means to the lower side of inflation, the market's going to definitely like that and see continued momentum towards pressure on the Fed to reduce rates. And maybe we get these 10-year bonds down to, under 3.9, approach the 3.8s again, where we were just, 4 or 5 days ago, where it bottomed out at about 3.72. So we have some positive thoughts for next week. Let's see what happens. And maybe the bond sales next week will be seen a little bit more positively than this week. Give us a call, email us, message us, follow us on all the socials, the Market Update Desk. We're here to help you all weekend. Give us a call, 616-293-2189. Take care.